The good girls in mom loves Jesus in America too. She's a good girl, crazy about Elvis, loves horses and her boyfriend too. It's a long day. See there's a greenway run through the yard. Now a bad boy, so don't even mess with. I'm a bad boy for breaking her heart. Ventura Boulevard, all the bad boys standing in the shadow in the good room. Her home with broken heart. Sky, gonna free fall. Gonna
Oh, yeah. That's a good one to start off the session, huh? Like to jam out in the morning, get you in the right mindset. We get started here in just a few seconds. Wrap up. We'll talk to you later, Leonard Skinner. All right. Good morning, everybody. Happy Friday. Glad everybody's here. Before we jump into our pre-market routine, I want to make everybody aware that if you're brand new, checking us out, that occasionally we have some pretty big sales. Our live trading room, okay, for first time, if you're just signing up right now, you can get a pretty decent discount, okay? So I'll go over this a little bit more. So if you want to kind of get a screenshot of what the coupon code is there. We also have a sale on our course material. Okay, this is Mastering the Charts Part 1 and Part 2. Okay, and these are broken down into chapters and things, so they're easily to go over. A great foundation to understand what we're doing here with when it comes to supply and demand, what that picture looks like on the price chart. Okay, so I'll cover this a little bit later in some more detail. A lot of big things going on with us here at the marketinstitution.com. We do have a couple of new prep screen zones that are on there. You'll notice as we go through charts that some of the prep screen zones or some of the zones are not labeled as prep screen zones because the prep screen zones have some specific criteria that go around it other than just the leg base group of candles. Okay. All right. Well, good morning, Roger. Man, long time. Good to see you. Jerry, oh wow. I want to reach out to say hello to everybody that's in Singapore and Indonesia. Glad to have you with us. Also, we have some folks from Dubai. So happy everybody's here. Let's get started with our day. We did have some unemployment numbers come out that didn't get much of a reaction. Okay, we've noticed with the past administration, and it's really kind of boiling down to this, what the past administration economics and market conditions were, along with what's going on right now with the current administration. And over the last 3 weeks, we've noticed that our economic reports that we got big moves and volatility everybody's waiting for, including the FOMC meeting. It's kind of a dud. Okay. I don't know if that's just because the numbers are more truthful now than they were before. Who knows? Okay. But at any rate, we have noticed a change in market conditions between the different administrations. Okay. And that's not good. That's not bad. And it's not putting one down over the other. Okay. It's just making a mental note that it's not the same as it was before. And we have to be able to change with that. Okay. In the pre-market, we still have a lot of light volume. Okay. And coming out throughout the day, we had employment situation, 9:25, which in 20 minutes, we have Fed speaker Michelle Bauman. 10 a.m., we have consumer sentiment coming out and wholesale inventories. We have another Fed speaker coming out at 12 p.m. And then another big one towards the end of the day, consumer credit. Now, the consumer credit number will have an impact a little bit later in the session. Okay. We've already been leaking a lot of these things. If you've gone out to our Discord room, okay, you'll see that some of the things that I've been posting have really had, they're kind of significant in a way, just to get a better understanding of the bigger picture. And that's all in in the general tab. Just so if you're part of our Discord room, make sure you're checking out the channels. We do have an announcement page there where you can get more detail on our promotions. And these are a steal because most often when we get into the live trading room, you will recover your tuition very quickly. Okay. And that's what that's designed to be for is, the pricing is to help you recover that quickly in one or two trades. The other thing that I want to point out is if you want to see kind of an observation of what we've done in the past live trading rooms, just come right out here, Mastering the Charts Recap and Review. These are available to everybody to observe. Not sure where that went. Let's open that up. And you can go through and you can see what we cover. Now, we go back over the last few live trading rooms. We show you the trades that we've taken. Okay, so what is this is referred to as more of just social proof out there. Okay, a lot of resources out there in our Discord room. I encourage everybody to be a part of it. There's no charge for that. You just have to register on the website. Okay, and if you're registered on the website, you're also going to get emails and notices of when we have upcoming classes and those fun things. Okay. Now, we are, let's see, yeah, just kind of quietly. I think the market's a little confused right now. So let's jump out to some reliables here. We got the open range breakout trade on crude oil and natural gas. Okay, so we measure that first 5-minute candle. Okay. A break below would be a trigger to go short, a break above, a trigger to go long. Okay. Now, price has been basing right around this range where we've seen buyers pushing price up. Okay. And more sellers up above. So I'm going to anticipate taking this trade short. I'm going to set the trade up right now. Okay. Now, if you're just watching this for the first time or haven't seen this in a while, okay, go slow. Just don't take trades because I'm taking a trade. Make sure that you understand what's behind it. And the reason for the zone 7105, 7086 is that is your risk on any trade. Okay. The zone is your risk. Make sure you understand the dollar amount for your risk on a trade and properly size your position, okay, to your trading plan. I'm going to lean more to the downside on this, taking a breakout to the downside at $70.86, setting that up right now, right there. We'll start off with using some micros, okay, which are about 1/10 the size of the regular contract. Let's see. We also use on crude oil, we use heating oil as an odds enhancer and gasoline. I also want to point out that over the past several sessions, heating oil, I'm not sorry, with what we've been measuring, okay, is we document what the pit close and what the 5 p.m. close. And we notice that sometimes those ranges are pretty wide from the pit close to the 6 p.m. open, okay, or the 5 p.m. close. But we often see that price comes back into those areas. Okay. Now some of them are wide, some of them are more narrow. This is a more normal, easier trading environment than the wider ones. Now, reason I mention that is if you notice on each one of them, price tends to go back and retest these areas after the session open. Okay. So using that small piece of information, help me choose a direction for the open range breakout trade. Okay. So taking a trade short, we're looking at short at 70.86. Our stop loss will be 71.05. The target range will be roughly about right into that 5 p.m. close and the pit close. Okay. So that trade set up. What supports this trade is watching heating oil and gasoline move prior to crude oil. So that trade is set up. Let me put a kind of more visual where the stop loss will go. There we go. Okay. And let's just make it a little more visual. Potential profit target area. Okay. Now, if price goes through that area pretty quickly, then we'll look for the opposing demand zone, okay? Supply zone above, demand zone below. Okay, let's get over to natural gas. Natural gas, the last 3 sessions has been not performing as it did before, okay? In the last 3 sessions, we've had narrower ranges. Very often, in the pre-market, just before the pit open at 9 a.m. Eastern, okay, we have documented historically that at the pit open, very often the Globex range is right at about 50% of the daily ATR. And that's why I put those ranges on there, okay? So we still have some good price movement potentially ahead of us. The broader picture, okay, making higher lows, kind of made an equal high on this one. Okay, so overall, the trend has been making higher lows, higher highs on kind of an intermediate time frame. Okay. So if you are taking the open range breakout short, okay, on this one, I've kind of missed my entry. Then you're going to look at that target range, first target, roughly about 3.303, okay? And then your demand zone, of course, would be down below. So let's identify, if you did take that, get the target 1 and target 2 for that trade, okay? Now, I also encourage you that if you look at the information inside of, the first 2 hours prior to the pit, you get some peaks and valleys, okay? Now, an opportunity is taking the measurement from that peak and extending it over, and that's often where what the time frame we get a retest of the open range breakout trade, okay? We got a couple of little time levels that we can use throughout this, okay? So got that one. Let's see. Yep. Now, I'm not going to go too much into teaching. We got a lot of things to do for trading, but the thing that I want to help you identify is that if price comes back up into this range, back into the open range area, okay, around this time segment, I'm willing to take the trade again, okay? I'm going to post that on there. All right, let's see, gold, potential breakout to the upside, 28.97. We're right near all-time highs. Larger time frame projected moves, 29.44, 29.92. And for all of you holding that physical gold, hold on to your bootstraps. And also silver, okay? There's potentially a massive squeeze on silver coming up, okay? All right, let's see. Our exchange traded funds are kind of not giving us much detail at all, okay? With the exchange traded funds, we look for what type of gap is going to occur. Okay, we take we got a downward slope and we're kind of flat right here. So we're not gapping up, we're not gapping down. It's just kind of a flat open. Same thing going on with the diamonds, the SPY, the Qs, and the SPY. Okay. Now we look for the different types of gaps because once we understand what those gaps, what performance. So if you have a breakaway gap versus a runaway gap or an exhaustion gap, you're able to look at the different areas and say, okay, well, we had a breakaway gap. That often means price retraces back down or up into the gap area. Whereas with a runaway gap, we often kind of gap and run, okay? Either to the upside or the downside. Right now, don't know. And I think there's a lot of confusion in the marketplace on the equity indexes because we didn't get a volatile, violent reaction, okay, from the non-farm payrolls. Okay. Oh, they're still showing monthly growth. Okay. Well, we know a lot of folks are going to be taking, well, those numbers can drastically change. Okay. Now, keep in mind, the numbers that are reported today were last month. Okay. So 5 weeks ago, well, 5 weeks ago, we were under the other administration. We've only had the new one for about 3 weeks. Okay. So keep in mind, the numbers presented today are still under the old administration and not under the new one. So numbers should change drastically. S&P, okay? We're still within the Globex range. Right now, we are an outside day on the S&P. What that means for us is that we can take breakout trades, okay? Let's bring this up over here. We're seeing a little discrepancy and using an odds enhancer, the US dollar 10-year, 2-year yield. Okay. Now, over the last hour, the dollar has just been basing as the 10 and the 2-year yield have been moving up. Okay. There's a discrepancy here. We want all of these to be going the same direction, either on a 30-minute or 60-minute chart. If they're not going in the same direction, okay, then it's an indication that we need to be a little more patient and wait for the markets to open. A little confusion, okay? So that's the confusion's okay as long as we're aware of that. It could be choppy and indecisive. Dow 30 stocks are still trading on light volume, and we're 10 minutes, 12 minutes away from market open. Let's see the cash value. Right now, the S&P futures are trading at 5.5. Okay, positive. And we have 1, 2, 3 negative over 94 cents, and we have basically 3 positive. So futures equals, or sorry, cash equals 0. Futures are trading at 5. Okay, futures or S&P futures are overbought by about 5 points right now, which is really not an extreme. Still kind of congested area. Now, these things that I'm mentioning and talking about, okay, help me understand and help me project a market environment. I mean, if you're walking into a storm or you're walking into sunny, hot weather, you recognize the environment and you dress accordingly. Okay. We need to know how to trade accordingly to what the market conditions are pointing out at the moment. And with the non-farm payrolls that came out this morning, you know, the reaction in the futures was very quiet, okay, compared to prior times when this has happened, okay? So we have prep screen zone 6135, 6148, and we have some zones down below which are more or less targets, not a trend change yet. These zones that are not colored are overnight zones, maybe a leg-based zone. It's not in the best location, but these areas can be used for profit targets, okay? Not necessarily getting in and get nestled into a trade, okay? NASDAQ also got a nice whipsaw price action and has been quieting down since that report as we approach the market open. Looking at all the large market cap weighted stocks on this, you can see that they're kind of mixed. We got Amazon down, Broadcom up, Meta up, and Tesla down. So it's a mixed market. The stocks move first. The exchange traded fund moves second. Then futures adjust to it. So we're going to need to see and monitor what the stocks are doing to trade the equity indexes. Okay. Dow. Okay. I took a late entry on the Dow off of this smaller price pattern. Okay. The things I want you to know, especially if you're newer to what we're doing here at the Market Institution, as far as supply and demand, we have to notice where the accumulation of buy orders are and where the sell orders are. See where that battle's at. Okay. Resistance is a place where there is just simply more sell tickets than buy tickets. Okay. The area below a resistance area is where we start to see a bigger accumulation of orders. Okay. And they're accumulating buy orders. Two potential places to take a trade entry. One is at the breakout above resistance. Okay. And the other one is to wait for a demand zone. Okay. So in this case, I was late. I was sleeping at the time. I didn't get the breakout trade, but when price came back down into that area, we had a supply and demand trade. So the next opportunity on the Dow is a breakout trade, 44,948. Okay. Once price breaks out of that area, then we will have a fresh accumulation of orders. Then when price comes back down, we'll look over and find the origin of that move. And since we made a higher low, we will be looking at this general area as a supply and demand trade. So you got two different patterns. They're called fractals. It's the same pattern, basically, okay, but just a little different shape. I mean, you have the resistance, you have the buy territory, price breaks out, activates the buy territory, price returns, then you have a trade, supply and demand trade, okay? So the next opportunity we will look for a trade up in trading the YM, starting off with a tick chart, will be about 44,948. And we can see that there's really not many obstacles along the way. So I'm going to set that trade up. I'll add on to my existing position for that potential breakout. Okay. Setting that trade up ahead of time, 44,948. Let's go ahead to 44. There we go. And I would be adding on to my existing position right now. Okay. And I'm just sticking with micros and kind of working my way up there. Okay. On a little larger time frame, seeing the playing field. Okay. We do have a nice zone down here, 44,556. And then to the upside, 45,342. As far as a prep screen zone, kind of right in the middle of that. The Dow is an inside day, so we have to take zone entries only. All right. So I need to cancel that right there. I know I was getting all wound up to take that trade, but the trading environment is important. And what we've noticed on inside days is you often get these little fake out breakouts. Okay. People get all excited about taking the trade and then it just kind of whipsaws them. Okay. Inside days are choppy, designed to take your money. Okay. And we need to recognize that. So zone entries only on inside days. Dow is an inside day, so we're looking at zone entries only. And we did have one on a tick chart earlier on where price broke out and came back down to the demand zone area. I think it was like on a 4-minute or something. You had to find it. Okay. So once price breaks out on the Dow, comes back to a demand zone entry, we have an opportunity. Russell, still taking a little heat. We had a 4-minute leg base group of candles, had the resistance, price broke out of that based on the non-farm payroll. Price dropped back in. I took the trade late on some volatility. My stop loss in place. Okay. And I am expecting from the bigger picture, if price does start to continue to go up, we have a large pocket of points. And the pocket of points just simply mean that there's no resistance once price gets above this area. Russell is still currently an inside day. Okay, so things are going to be a little more choppy. I have to understand that I'll be taking a little heat on that. Okay, and a late entry would be when price breaks above that resistance at 23.20. but I would shy away from taking any breakout trades and just wait for a zone entry on Russell. Okay. All right, crude oil decided to move up, okay, rather than down, and now we do have a resistance area. We qualify our support and resistance area by minimum of 3 touches, okay? In order to have a resistance, price must go into that area 3 times, okay? Minimum. 2 points often identify an area, 3 points confirm that area, and very often 4th time is the breakout. Okay, so what's really happening is the sell tickets, there's more sell tickets up here than buy tickets, and down below there's more buy tickets than sell tickets, and it forms that range. As price goes back and forth in this range, it creates an area which we refer to as a dead space. Okay, and these are areas that you need to be watching because when price comes back through this area, okay, we often have a pretty fast move because all the orders have been filled. Recognizing that crude oil is right on the 50 and the 200 daily moving average for a continuous chart, or adjusted. Yeah, this one's adjusted. Okay. Heating oil, just getting a bounce. Okay. Heating oil is one of our odds enhancers. All right, looks like we had a little break to the downside, and we are seeing price come back up into the open range area. I am expecting a move down. Okay, so price coming back up into this range may give me an opportunity to participate. 2 minutes away from market open. What else do we have on deck here? Wow, metals market is rocking. Okay, so price went through that supply, and on copper, went through that one. Platinum's moving up. Wait a minute, this is what happened to the yields are still moving up and the dollar is still moving down. Okay, let me give you a visual of that. Now, this indication, dollar down, yields up, tells us just be a little more patient, back off. Okay, don't be so aggressive to do something at the open. Okay. Now, markets are also showing some divergence. I mean, look, we got silver, we got copper, we got platinum, and gold moving to the upside, while we have the 30-year, the 10-year, and the 5-year going down. That's not normal. And the yields going up, dollar going, this is a mixed up market. Okay. You need to wait for this. Okay. Understanding these market conditions, okay, will save you a ton of anxieties. Okay. So, and, just trying to take a trade because you want to take a trade. Okay. All right, let's get down to the tick charts here. And we are market open. I'm gonna clean these off. If price starts to come back down on the S&P, notice we have that dead space there. And just as an example, okay, we had that dead space, and look what happened when price came back to it, just went right through it. Okay. This is why we document the that dead space, because price just travels through it very quickly. Okay. And wrong. Good. And we can see the same thing happened here on the NQ. So a great example of that. There is one thing that we did notice yesterday with that choppy, grindy session when it's downward sloping. Okay, that often it breaks out on the 8th time, making the 7th an area to be looking for a zone. Okay, now I noticed that on a couple of charts. The S&P did that. The Russell did that, the Dow did it, you know, just bouncing around 1, 2, 3, 4, 5, 6, 7. Okay, and then looking at the breakdown. Okay, these are price patterns that we're paying close attention to and observing here. NASDAQ moving up nicely. Looks like we're coming right up into some supply. We got 4 Dow stocks negative, 9 positive, 5 times 2 is 10. Cash and futures are balanced. Okay. Dow and Russell. Looking for zone entries. Let's drop down to a tick chart. Yeah, let's look up and left. Okay. In order to find there we go, we're prices right here. Okay. I'm gonna walk you through our 5-step process real quick. Okay, you want to know more about that? You can you know, ask questions if you like. First thing we do, step 1, is we identify where we have support, where the buyers were pushing price up. Okay. And that support area is just a representation of more buy tickets over sell tickets. That's it. Okay, it's not a trade. Once we recognize that support area, minimum 3 touches, that's step 1, then we're right above, we start looking for where our sell territory is. So often traders using supply and demand look for their zones in absolutely the wrong place. Zones must be located within a sell territory. Okay. Now, as we look inside of that sell territory, we notice that there's some bounces off of the support, and we have to identify those bounces to see whether we made a lower high prior to price taking out the sellers or whether we made a higher high. This helps us understand where the location of our zones should be at. Okay. Now I'm not going to break down the tick charts to get that. Once your eyes are trained, you'll pick up on this pretty quickly. Okay. I'm going to look right in this range in the lower 2/3. And we'll capture this range here for a zone entry for the NASDAQ futures. Okay. Okay, so looking for some sellers right up there on the NQ. Hey, Scott. Always good to see you in here. Taking NQ
Order
now.
filled.
Okay. If I got stopped out on the Dow. Russell's still giving me some heartburn. Okay. Let's see. Okay. I need to line these up. We have recently updated, you know, got the large market cap weighted stocks. The 2 largest from different resources are Apple and NVIDIA. And we've replaced those since Apple and NVIDIA are on the S&P. They're on the Dow. They're on the NASDAQ. Okay. These 2 stocks have a big impact on what the futures do. Okay. The futures, the NASDAQ and the S&P and Russell are market cap weighted indexes. Larger market cap stocks move that index more than the smaller market cap. Okay. All right, so this is why we're monitoring the stocks. Futures are a derivative, they follow the cash market. Okay. So stocks have to move before the exchange traded fund. Okay. Stocks first, exchange traded fund second, and then the futures adjust based on a computer model. Computer is called the Globex, which is our order matching service. Nice job, Scott. Okay, looking for overhead resistance and a zone. Okay. Between 8 a.m. and 11 a.m. Eastern. Okay. 8 a.m. to 11 a.m. Eastern. We look for when price approaches a zone to be right on the quarter hour. Now that's important. If it arrives early into the zone, it often will give you an indication it'll go through it eventually. Okay. You might want to stay in it a little longer. Okay. Especially if you're already long right now. Okay. If it arrives right on time, then you want to anticipate that within the next 2 to 3 minutes after the quarter hour, okay, price will then either go down or up, depending whether you have a supply zone or a demand zone. Okay. So we'll be looking for our first supply zone entry on the NQ 2191, 2991. Okay. Not ready to take the breakout on that one yet. Nice move from the open range candle. All right, we have seen natural gas coming back up into it, but it's not right on the time line yet. Okay. Now the timeline or where we expect price to vector from here, okay, is based off of what we've seen in 2 hours prior to the pit open. Okay, so I'm not ready to jump in short on nat gas until price gets into this timeline. I might miss the trade. Okay, but I'm anticipating that based off of what we've been studying, that the entry to go short or go long, okay, you decide what's best for you, will be in this time level. So we looks like we still have about 10 or 15 minutes before that to play out. Okay. All right, where were we? We were on the NQ. All right, let's get the S&P up here. Special note, you can already see that the bank index is back below the moving average and dropping. Okay, nice pullback on that. The BKX is the bank index. You have 24 national regional banks. The objective on that is if the banks are moving up, that's money coming in. If the banks are moving down, money going out. Don't fight the banks. Okay. So right now, we have seen the first 5-minute candle closing below the moving average, a little more on the bearish side. But that doesn't help with the timing of a trade. It just tells us things are a little more bearish when it comes to the banks. Okay. As price is moving up, let's look to the left above the current price and let's find our supply. Looks like it might be up there a little bit. Okay. Step one, identify your support and resistance areas. Okay. Now, price must use that area multiple times, 3 times minimum. Okay. In order for you to use it as a reference. If you only get 1 or 2, adjust the time frame. Maybe you'll get a different picture. Price had more buy tickets at this area until it did not, and price went right through it. Above that area is where we have our accumulation of sell orders. Okay. We look for our supply zone and our demand zone within that sell territory. We use a very specific group of candles, leg-based group of candles to isolate where that potential zone would be. Okay, so S&P looking at that 6122 in a supply zone. Okay. Based on the structure, we made a lower high prior to price taken out. So we're gonna look in the lower 2/3. Okay? Very methodic when it comes to the picture on the price chart. As far as the timing, we're gonna look between 8 a.m. and 11 a.m. for price to intersect, okay, with that supply zone on the quarter hour, okay? So I want price to arrive here in 3 minutes, 4 minutes, okay? Or the next quarter hour, right? Then I'll be looking to take it short. If it arrives early, I have to anticipate, okay? I have to anticipate that price will go through that, okay? So you guys keep me alert, text in there if S&P or the NASDAQ hit the zone, okay? That would be great. We're looking at our top large market cap weighted stocks, and they're kind of stalling right here. The candles got smaller after the gap up. Google's still low, Alphabet's still a little bit lower. Alphabet, Amazon, Meta, new high, Broadcom, NVIDIA. Notice Apple and NVIDIA are not joining in the big race to the upside. Okay, NVIDIA's up, Apple's kind of flat on the session. Another odds enhancer to tell us it's okay to be waiting. And then by saying that, let's go look at the dollar and the yield. That says wait as well. Oh man, got stopped out on the NQ as it turned around. Okay, NQ is still on an inside day. Breakout trades are going to be elevated risk. Looks like I'm waiting on that. Russell, still an inside day. We did get a zone entry. Stop is in place. I still have about, oh, I'm going to adjust my stop loss on this. Okay. Crude oil. Looks like heating oil is going to help take that crude oil to the upside. Nat gas, we're still waiting. We got about another 10 minutes for nat gas. The trend is below 60. Okay, let's come back to those internals. Trend low, time to go. So if the markets are going up and the trend is going down, okay, is that the scenario we have right now? Okay. If the trend is lower at 60 and the markets are ascending, this implies that there's more selling going into the up move than buying. Okay. This is going to make those supply zones a very valuable place to look for an opportunity to take a short trade. Okay. So make sure you know where those are at. We already know the time we're looking for it to arrive. It didn't hit there on the quarter hour. Okay, this quarter hour. So we have to wait for the next one. Okay. If it arrives early, chances are it might go through that area. Okay. Yields are still moving up. Trend is low. Yeah, NQ is an outside day. Yeah. It was at the open. The Dow and the Russell are still inside. Right? Yeah. So I have to shy away from taking breakout trades on the Dow as part of my trading plan. Okay. Okay, here comes crude right back down. Nice call, Chris. I could have said it wrong too. You know, I've got a lot of things I'm looking at, so I don't discount that I might have said it differently, so that's okay. We got it straight now. All right, we're getting close to that natural gas, the time we expect price to change. Okay. And I always appreciate the comments, there's sometimes I miss something, or I say it the wrong way and mean something different, everybody has the ability to call me out on that. And I appreciate it because, I don't, our main goal at the Market Institution is to help traders achieve their goal. So often that's a group effort. Okay. Thank you, Liz. And there goes the metals market shooting up. There goes gold getting the breakout. It takes a village, it does. And, that's why our community trading room and, sharing ideas, being able to express them, it's so important to have a good team of people around you, you know, just for that support. All right, we did have some supply zones on those. So copper, still in a strong uptrend. I would be very cautious if you're going to take the trade short. Right now with the dollar going lower, we're seeing the FX markets going higher, but the 10 and the 2-year yield are opposite of the dollar. This is why we're getting a lot of confusion in the marketplace. Gold breakout to the upside. Okay. Notice the price structure. Notice we didn't have a big drop in front of this. Okay. Within the price structure, you're going to notice where the low pivot points are. Okay. Especially in the buy territories and sell territories. Platinum getting another shot at a breakout move to the upside. Supply up at 1,067. Let's see what copper looks like. I got smacked on copper a little bit early. I got stepped in anticipating that the news would be a little more reaction to the downside. Okay. Okay, so this is our sell territory. We're in the right area. But due to the other metals markets, or especially gold and the other ones, if you're planning to take the trade short on copper, be a little cautious, okay? When you look at the leg base group of candles on copper, did you find it to be where the leg candle leaving is bigger or smaller? Looks about the same size, okay? The reason we look at that leg base group of candles in that area is if the leg candle leaving was much bigger, then price can use that zone twice, kind of like a resistance area, okay? If the leg candle leaving is smaller than the one in the zone, usually it's a proximal line entry. And we have to know what type of entry to look at when price is hitting a supply. Also recognize you're going against the intermediate trend. We're making higher lows and higher highs. This would be considered a counter trend trade. And with any counter trend trades, 87 out of 100 times, that leg base often gets a 1-to-1 move. So if you do choose to take, I'm going to take this copper going short. I'm going to take it right at the proximal line. I'm going to look for a 1-to-1. I'll manage my risk based off of what I see over here as well. Okay. So that's at 4.6134. Trades in 5 tick. There we go. All right, nat gas is in the area. I am now going to attempt taking that. Well, I'm going to not attempt. I'm going to take it. Okay, at 3.94, we're going to sell short, and my stop loss will go at 3.411. Okay. Now we waited for this time based off of what we saw in the pre-market activity in the first 2 hours. Okay. So I missed the open range trade for the breakout. Okay, the open range breakout trade, but I'm going to still use that information. Okay. All right. Let's see. Gold. Ooh, gold backed off. For those watching the live stream and participating with us, please ask questions. Don't hold your questions back. I have a great team around me that is always monitoring the questions, and we take your interest and comments to heart. Okay. So don't be shy. If you have questions, need a little more explanation on something, just let us know. Okay. Yeah, we miss you too, Scott. Wish you could hang out with us more often. But we get you once a week. That's good. Hey, good morning, Matt. Man, you've been doing some fantastic work in our Discord room, posting charts. Really appreciate that. For those that are stock traders and just all around, just kind of looking at the charts, I invite you to kind of look over at what Matt has been doing in there in the chat. Okay. Just mapping out great trade setups. Okay. Now, these are pictures, and the more you do this, and I've also noticed a few other, when you do this type of uh, activity and you post it out there, accelerates your learning curve. Okay. And for those that are kind of looking in, seeing if this is something that you want to do, okay, or you like this style, use those examples as reference. Thank you again, Matt. Appreciate you. All right, what do we get filled on? Nat gas. All right, nat gas, we have about $170 risk. We have one trade going on. We've already explained why we waited, okay, and what we used to anticipate what we were waiting for. My risk on the trade is up to 3.411. If price continues to go lower, my target's going to be about 3.304. Okay. Always acknowledge what your risk is on the trade. Manage that risk based off of your trading plan. Okay. Just don't focus always on the reward, because we need to watch for that. Okay. All right. But back to the equity indexes. Wow, that's not easy to trade. You remember what we looked at? What we stressed that we were looking at to be willing to wait on these equity indexes? Yeah, dollar, 10-year, 2-year yield going opposite direction is a very good odds enhancer to be more on the waiting side of things. We are forming a high tight base on the NQ. We are approaching the top of the hour where we may see another economic report, wholesale inventories, consumer sentiment that may have a little impact on the market. Okay. So be prepared. In about 4 minutes, 5 minutes, we will be looking at the economic reports and a little reaction on that. Okay. So what could that reaction be? Well, it looks like we're forming that high tight base. Okay. Now, a couple of odds enhancers with a high tight base is we look for from, well, it looks like this was the origin of the move up. Okay. So we look at that origin of the last move up. Often we only get like a very shallow 23.6% retracement, and price consolidates sideways there. Okay. We can see the consolidation, 23.6. We often see as well as a moving average 50 catches up to price. Boom, a second odds enhancer. When we're preparing for where to enter, we have a resistance area And we have a support area. Okay. Now, very often price breaks out on the 7th time on this. I know, I like that geometry. For those that haven't been around me for a while and just checking things out, yeah, everything is very specific. Okay. Now, if price breaks out on the 7th time, let's just open this up. Okay, so take the high point, 1, 2, 3. Oh, that's the 4th time. Okay, so we need 5, 6, and then 7. Okay. So as I was leading up to taking a breakout trade to the upside, I don't have all the information I need. Price retracing greater than 23.6 now. Price chart change. Okay. I just looking around. Boy, nice pullback on the NQ. Russell's still kind of quiet. Looks like Dow and Russell are kind of doing their own thing. Take a look at the large market cap. Meta, a new all-time high. Nvidia. Oh yeah, that's what we wanted. Wanted that fake out breakout here. Now Nvidia might be looking for a drop. Notice we had a sizable drop down, 3 touches on the left, low pivot point on the right before price took out the sellers. Okay. Now that lower low often leads to a fake out breakout. Okay. Where your entry on that going short would be back below as price comes into that buy territory. Okay. Now, Apple and NVIDIA are great odds enhancers. Okay. And Apple is also right at a third touch of resistance. If the resistance holds and these 2 products continue to move lower, okay, the rest of the equity index will probably follow. Okay. We always want to be monitoring the stocks. We want to see where their supply zones and demand zones are at. And always remember the futures follow the stocks, they don't lead them. Okay. I guess.
Order filled.
All right, looks like things are pulling back. I was stopped out of the Russell. Russell came back to demand, 4-minute demand zone. Consumer sentiment report came out.
Order filled.
Price came back into demand. Yeah, it looks like that demand is also a support. Got a lot of dead space here. How'd the Dow react? Oh, the Dow did a little whipsaw. No breakout trades. See that? We have an active buy territory now. But recognizing the inside day, you often get this little pop out and then it comes back on you, okay? Inside days are choppy like that. And we have to understand that that happens around those breakout areas on the indexes that are inside the prior session's range, okay? This zone has already been used and we now have a new support area down here.
Order filled.
Ooh, Apple just take Apple and Nvidia. I guess we're gonna play this to the downside. I just don't have an entry. So what are the stocks doing right now? They're looking for buyers, aren't they? It doesn't always necessarily mean I'm gonna have an entry. Okay, but boy, what a drop. I was hoping we'd get up to that supply zone first. Notice how fast the drop was as it went into that dead space. You always have to be looking left to find where you might have larger potential price moves, okay? You have a demand zone, a tested demand zone down here. Might even, yeah, that'll be the third time when we've made a higher high. So this is a viable place to look to catch a bounce off of that area, 21,725, 21,703, okay? So this is not a zone, but just recognize the different patterns. Not a zone. Well, what is it? Well, it's the third. To make support. Okay. And with that third time that prices come down, we see that made a higher high before it came down into this area. So we often get a pretty strong bounce off of that. Okay. That would be a great trade there. We need to watch the stocks. And let's observe what are the Qs doing? Well, they're coming right down to that support as well. Okay. Watch your stocks. We're looking for a little bounce off of those. Okay. All right, NVIDIA helping. Alphabet's still going lower. Amazon down a little bit as well. Okay, so as we are approaching this support area, okay, looking back up to the left, we can see we had a large pocket of points right here. Very light volume. Okay. Light volume price drops often get recovered. Okay, we're looking for an entry about 725, 703. That's telling you have 22 points risk. Okay. But if you're trading a mini versus a micro, calculate your risk. Okay. Just waiting. All right, let's see what we got going on the S&P. Price is back in the buy territory, but I just don't have an entry to go long yet. Woo, there we go on net gas. How do you like that little odds enhancer? I know Miss Chris does. Well, that might help me make up a couple of my smaller drawdowns. Okay. Yeah, it looks like heating oil. We're still set to go short down at the breakout on crude oil. Okay. Crude oil having that dead space in between here and that support. We're looking at an accumulation of sell orders. So I'm going to focus on taking the breakout of that support. Okay. Okay, I'm going to adjust my stop loss on nat gas to 3.401. Okay, reduces my risk down to about $60. Our potential target 3.304. Okay. Okay. If we're planning for a drop, a base, and a drop, okay, if that is what's in the cards right now, okay, we want to see that after a strong drop in price, that most of the test of resistance are over on the left-hand side. Okay. We often see this pattern after a strong drop or move down in price. Okay. We do have a leg base just right above it. This is a common price pattern where you could get a little breakout to the upside and then price reverses. Okay. Drop and then base and drop. Okay. We'll see how it plays out. Stocks have not shown a significant move back up. In fact, NVIDIA is looking a little bit more bearish. Got a little bounce on Microsoft and Alphabet, Tesla moving lower. And again, we're kind of waiting. Indexes still waiting. Wow. This, you got the 5, 10, 30-year bonds and notes coming in. Look how fast it's going to that dead space right there. Okay, dead space is a little bit lower. We've got a nice pocket of points, prices coming into on the 30-year. And I had that trade set up earlier this morning. 10-year is right in the dead space, so we're anticipating price to continue going through that. Now, when bonds and notes are going down, the yields are going up. Okay. And the yields are still going up and the dollar is still dropping. Okay. The internals trend is still low. Advancing issues over declining issues are kind of flat. Metals are still going up. We did have a trade on copper. What happened? Ooh, we're still approaching copper coming up to supply. Okay. Recognizing the trend on copper. This is a counter trend trade, and counter trend trades have a little more elevated risk. If you're a long copper from the breakout, okay, then this would be more of a profit target for you rather than a place to look to take a trade short. If you choose to take a counter trend trade, very often going against the trend, we only get like a little 1-to-1 reward, okay, versus the risk. So just keep that in mind. Look at the leg base group of candles, see if it's a proximal line entry, and see if it is more of a zone entry. If filled on copper, okay, then I'm looking for that move down just of 1-to-1, okay? I got copper approaching. Now the yield go. Oh, there we're starting to see a little bounce on the dollar. Let's come back out here. It'll bounce up on the dollar. Let's bring up some FX markets. The VIX is actually rising as well, just a little bit. All right, here we have Aussie dollar. Taking a late entry on the Aussie dollar. I'm just going to come in at the market. Selling short.
Order filled.
Stop loss. 63.035, 63. $175 risk. Potential reward to the opposing demand zone. Okay. Man, we were so close to getting that. And then I missed up, because I was looking a little bit lower. But that gap area, we had to reverse leg base. And once I made the proper adjustments to the reverse leg base, it hit it dead nuts on. And I had mine at 221 even, missed me by about 87 cents, 78 cents. That would have been a great move back up in the after hours. What this exposed is where the buyers were sitting. Okay. Everybody wants a trade like this to get right there at the bottom. Okay. And run it back up. Well, what was the information over there? What does a demand zone look like? What are the characteristics around that demand zone? Well, we had resistance. Okay. We had a buy territory. We had a structure that made a lower low before it took out the sellers. Therefore, in the bottom 2/3, all of the information was right there if you know what you're looking for. Okay. Our effort at the Market Institution is to help you identify those potential turning points ahead of time. Okay. Where we have the likelihood of price changing direction. Okay. Boy, the trend is going lower. Dollar sign trend. Okay. Trend is low, time to go. Trend is high, time to buy. Okay, so we got Aussie dollar. We are awaiting copper. What else do we have? Not much. Even when we start breaking this down into tick charts, we're seeing that, as we're waiting for entries. Why are we waiting so much? Okay, well, we're waiting for the stocks to show us whether they're going up or whether they're going down. Okay, right now they did go down, but in order to confirm that on this small time frame, they need to make a lower high followed by a lower low. So let's. Not a zone. All right. How many saw the three touches as we were talking about that? I didn't get to trade it per se. When you have a strong drop and you have three touches on the left, often you get that sudden drop, usually in front of a V-shaped reversal. Okay. I was hoping for a little more of a breakout to the upside there. All right, so our next demand zone for, let's clean up our charts. Actually, let's do this. Drawing, remove. Select all, click OK. All right, step one. Let's identify a support. Minimum 3 touches, so it looks like I got 2 right here. I can expand that in order to follow my process. I mean, after all, price did bounce off of those areas. There were some unfilled orders. And we all know that support and resistance is a range. It is not just one line, okay? All right, so price broke past that support. Okay. That's what I have drawn here. There was a little speed bump right there. Our sell territory above. And price made a lower high before taking out the sellers. So as we look for a leg base group of candles to go short, I see we have one right here. And we have another one right slightly above. So we have 2 potential areas within our sell territory where we anticipate some sell orders, okay? Now, to help you decide which one would be better, okay, which one you should take a shot at, is when we're taking supply and demand trade entries, is you take the distance of your zone, and then price must move away greater than 2 to 1 in order for that zone to become active. So it is an active, fresh zone. Of course, the upper one also moved greater than 2 to 1 away, okay? Yeah, you should be noticing the volume on the equity indexes. Yesterday was very, very light volume throughout the whole trading session. How come nobody told me we had 61.22? Man, you guys got to get my back, not just try to trade so much. I'll do the work for you, but you got to let me know. This zone is not active. It has not broken our support area. Unless you tighten it up a little bit more, it still has not moved greater than 2 to 1 away. So we can start to anticipate taking a breakout trade with a little more risk on that breakout trade because we have that little speed bump right on the other side of it. Okay, let's come back to the NQ. Yep, Scott, that's why you need to hang out with us. Don't take any calls. around when the market's opening. All right. Now we're just searching around. Okay. We've got a couple of potential trade setups. Okay. I want to see how price comes back up to that supply. We're still between 8 a.m. and 11 a.m. Eastern. So price coming into this zone, we're 8 minutes early. Okay. You're early. There's a high probability that price is going to go through that zone. We monitor these things over and over and over again. Okay. And as you monitor these things, you start realizing that, hey, if price hits a zone on time, there's a higher probability the trade will work out in my favor. Okay. If it comes in there early, it often might get a 1-to-1 pullback, but then eventually stops me out. Notice what's happening over here on the stocks. We're starting to get a good little bounce off of that drop. Okay. So the timing of looking at the stocks and seeing as price is coming up to that zone 7 minutes before, I'm going to anticipate looking to take a trade short. If price arrives at my zone at the bottom of the hour in 7 minutes, okay, I'm going to anticipate this zone will get taken out. If you need more clarity on that, just let us know, okay? Come on, that gas. Slow moving. Crude oil. Okay, still building accumulation of sell orders, but we're seeing another uptick on the heating oil. Okay. Okay, so the Russell, we have a sell territory now. We have a leg base. Now, for everybody that's watching this on the live stream, we'll post a link in the chat for the Discord room. And generally, after a live trading room session, we have more of a community type trading session. Everybody can come in there, share their ideas. We just kind of hang out and trade together. Okay. You have a leg base right there. There's once, twice, 3 times. Okay. I'm sorry. Please register on our website at themarketinstitution.com. Then we can get you that link to the Discord room. You only have to do it once. Okay. Oh. I notice we have resistance and we have a support area. So if price starts moving back up on the Dow, it should go right through this area. Okay. For those that are trading the larger time frame charts, this is pretty much a non-event for today. 15-minute, 20-minute candles. You just back and forth on the equity indexes. Gold breaking a new high. Aussie dollar. We're still in the Aussie dollar. The yields are still going up and now the dollar is coming behind it. Okay. Hasn't taken out any highs, but it stopped being negative. So dollar going up, the 10-year and the 2-year yield, you're going to see the FX markets go down. Okay. Now, what generally starts with this is bonds, the yields going up, and then you will see the bonds and notes going down. You will see the FX market going down. You will see the generally the metals going down as well. Okay. But something is afoot with the metals market in what's going on in the overall marketplace now. Okay. You'll see that with the gold making a new high, that copper trade is going to have a little extra risk. Okay. It might be just enough to get us up into that zone. Okay, so we're 2 minutes away from the bottom of the hour and our time where we're going to wrap up. Okay. You'll see with the market institution, we incorporate a lot of teaching along with potential trade opportunities. Now, we are not a picking service. Okay. We're not here to dish out trades. We're here to show our methodology and our approach to taking a trade and the education behind it. Okay. When we're in a live market, we can bring in a lot of these little odds enhancers, little things like, how do when I got two zones in the right area, how do I choose which one? Well, we explained that if price goes into a supply zone or a demand zone earlier than the quarter hours, okay, price often goes through it. Okay. Just a mental note to know when price is arriving into your zone. Okay. If it arrives on time or within 3 minutes after the quarter hour, it tends to be a more favorable trade. Okay. Now, those are things that we observe, we incorporate into our trading plan. Okay. 87 out of 100 times when you have a leg base group of candles, you're going to get a small move. Okay. So I'm not upset that I might be missing something. Okay. Maybe later, if it keeps on going, I'll get upset. But right now, this is not my entry. Okay. Might be for a short-term trade. I mean, it was a nice 10-point drop on the NQ. Okay. But the better zone is up a little bit higher as we walk through it. Okay. So we're right at the bottom of the hour. Price, I'm going to leave this on here, but I'm expecting price to go through this level, not taking the trade. And also with the S&P, okay, price has not moved out of that zone greater than 2 to 1. So that, even though I have a leg base right there, that's not a place to take a trade. I'll be looking to take the trade at the breakout on S&P below 6,078. Target down about 6,049. Okay. What I need to happen before taking a breakout trade is a brand new leg base group of candles to form. Okay. Once we have that leg base group of candles, then the breakout trade is often a little more probable. Okay. We made a lower high. We still haven't taken the breakout, so we don't have an active sell territory. Okay. If you like our method and approach in what we're doing here with the marketinstitution.com, our live trading room, we have a special on it, February special, which is right up here. Big sale. Okay. Your first month, you would knock off 50%. Look, if you can't make $125 in 30 days using, then cancel it. Okay. Coupon code LTR, live trading room. Okay. CNY. Okay. That's the code that you want to put in to get the discount. Okay? And then if you're interested in our course material, 25% off today, or this, the time period here, MTC, 25%. We offer the coupon code. This includes Mastering the Charge Part 1 and Mastering the Charge Part 2. It's a pretty good deal, okay? All right. I'm going to wish everybody a good trading day and head over to the, oh, thank you for that, Liz. I'm going to head over to the Discord room and hang out, doing some live trading over there. Generally, it's just a community room. If you want access to that, just register on the website. Bring that back up. Go out to the marketinstitution.com, and there's no charge for that. Okay. And then just register and become part of our community. Happy to have everybody. Okay. Any questions that I need to cover, team? Well, we got everything. And just another shout out to Dendi and all the team, or the folks over there in Indonesia and Singapore that are joining us today. Please let us know if we can be of any assistance to you. We do have some classes coming up that are free that you can jump in. All you need to do is register on them. Okay. And you can attend that. That's next week. All right. I'll see you guys over in the Discord room. Happy trading, everybody. Be safe. And wait for that trade to come into play. Happy Friday. See you next Friday.